Hello, guys. This is Nikki. My name is Nikki. I'm at Faces Trader. You could follow me on Twitter. And of course, this is the Awesome 10X YouTube channel where you receive 1 p.m. daily live market reviews. So let's start for May 18, 2020. It's Monday, the official Monday start of our MCQ, Modified Community Quarantine in the Philippines. So far, we're seeing that the market is decisively low. You're down 62 points or 5479. But what's clearer is when you look at the statistics. I'll show you the stats for the day. We're actually seeing a relatively very weak market. And to show you how weak, we actually got these things. You've got 8 new 52-week lows. Now, what does an 8 new 52-week low mean? It means that when your index dropped at about 4,000, your PSEI fell 4,000, there were companies that had a price. When you have a 52-week new low, that means that it broke that price of PSEI 4,000. Meaning, if you chose the wrong company, even if your index is still trading at 5479, you already have companies breaking those PSEI 4,000. And what are these companies? Let me show to you which companies have fallen to new lows. But first and foremost, let's go to our most active names. For the most active names, you could see that it's a slew of red with only Philex Petroleum up 16%. The rest are decisively down. You've got your best big caps, BDO, Pure Gold, URC, Ayala Land, Ayala Corp, Metro Bank, all falling down 3%. Now, if you look at the weakest companies for the day, you've got Megawide, Macro Asia down 10%, you've got STI down 9%, CHP down 9%. So a lot of these companies, such as Cebu Pacific down 6%, ABS-CBN started trading down 7%. We actually are seeing a couple of new lows. So let's look at the charts. Now, the more new lows there are, it just shows to you that the market is generally very weak. So, example, this doesn't need a lot of explanation, but this is the weakest company so far. With Macro Asia falling, this is about 10% lower than your 52-week new low. So this was your index during March 19, when the index was trading at about 4,000. This is already down 13% or hitting a 52-week new low. Macro Asia is 52-week new low. Mega wide, let's look. It's also a 52-week new low. Now, what's the common denominator with all these companies hitting 52-week lows? Well, they are hitting 52-week lows because they have already been deleted, meaning MSCI, your Morgan Stanley Composite Index, which will run until the end of the month, has already officially deleted Macro Asia, Mega Wide, East West, and you'll see that all of them are hitting new lows, or if not 52-week new lows, it's very close to that. So this is your East West, also breaking that 7 mark. We'll probably see if it goes to 650 tomorrow. So definitely, you're already seeing a shed, even for just a week, about 9% for East West, same for Megawide, same for MAC. Those 3 were deleted. Same for Security Bank. Let's take a look at Security Bank. Now, although Security Bank hasn't hit the 52-week new low of 80 pesos, we're seeing a decisively weak market for all the banks, with Security Bank already falling 10% since the MSCI announcement of deletion. Meanwhile, your companies as well, even if Pure Gold got added, you could see that the market in general, after rallying for Pure Gold to 50, is now breaking that 46 level. And it just shows to you that whether you're added or whether you're deleted in the market, relatively speaking, is so weak such that even the additions on your MSCI are getting a sell down. This is below your 46 level, your 45.80 level. And so there are some people assuming that the strength of the sellers are stronger than any good news possible. So now you're seeing pure gold having a strong resistance here at about 48 and 46, or an average of 47. You now have a lot of sellers now believing that any good news is probably not enough to satisfy the market. Is liquidity leaving the market? Well, let's take a look one by one. For instance, as you go through the statistics, we go to stats, then we go to analytics. You go to your PSEI, Philippine Stock Index. That would be your index companies. Take a look on your percent to date change. And you'll see that even from just 1 week, there's only a handful of companies, and the market is very, very narrow. You've got only Meralco, still strong. BPI is still strong, which is what we're saying is quite an aberration, given most banks are actually very negative. Robinson's Retail is strong, Globe is still strong, URC Jollibee remains to be above for your week on week. Now, if you go to the year to date change, you'll see that for the year, these are the only companies that are strong in your index. PLDT, Pure Gold, Globe, URC. You'll remember that these are our GPOM picks. Meralco, Robinson's Retail. So that's your top five. Now, even your URC and Meralco, it's still down 13% for the year, meaning the market in general only has 3 winners in your PSEI. Therefore, your PSEI on average is down 30% for the year. Year to date, your index is down 30%, with the biggest losses coming from GT Cap, Bloomberry, Security Bank, Metro Bank. So you'll notice that Metro Bank and GT Cap are actually one of the weakest, even if you go to our financials check. If you go to a financial checkup, you'll see that Security Bank got deleted. Metro Bank is very weak. BDO is also weak. BDO is now trading at 90 pesos, which is close to the MSCI, sorry, not MSCI, but already going close to your 52-week new lows. So as a sector, we're seeing that the market is already retesting those PSEI lows. So there was a question before if the index was going to retest your 5,000 PSEI 48. The looks of the banks are going to make that possible because of the way they're dropping. Your banks are very weak. You'll see that BDO is now breaking down. It was breaking down the 96 level, continuous follow through. Whether we see BDO falling to 84 or lower, the trend is downwards for the banks. This actually makes us question the strength of BPI, given that the sector is actually down. Now, it's possible that BPI could actually retest your 50 or 55 mark a couple of days, given how the overall market in general is behaving. Let's take a look on your stats. You'll see that when you have a very narrow level that are rising, it actually means that we are still in a bear market. We cannot pick any stocks. You should be very selective of the companies that you own. So example, in services, we know that definitely Globe, PLDT, Pure Gold, and RHI are your strong companies. Those are the only green ones in your entire services industries, with of course these companies falling the furthest. Macro Asia, SSI, Cebu Pacific, STI, PLC, Bloom, these are suffering a lot. Take a look at what happened on your Cebu Pacific, for instance. Your 52-week low is 35 pesos. It's now closing at 39.6. I think the question is, will it break down to new lows? Isn't really a question when you already see that a lot of the companies that are in the weak side have already broken to 52-week new lows. Macro Asia is one. Megawatt, which is construction, is a new low. 490 is a new low. EI, I think, is also in a new low state. We've got a lot of companies hitting new lows, which definitely tells us that the market is decisively weak, and liquidity is leaving the Philippine market even at PSEI 5.5. You have a lot of companies going down with 141 declines, with only a few advances even making the additional MSCI positives even being sold down. So that tells you that the market is having more sellers on any rallies, and you've got a lot of people wanting to be in cash. So even if relatively we could see that even when you go through all the statistics, relatively pure gold is strong, but it doesn't mean that it will not fall. The market is weak, so anything could fall, even your globe, even your PLTP, even your pure gold. Now let's discuss something that people have been asking. Metro Retail Stores Gaisano has fallen from 180 to 160 on the news that its earnings fell below estimates. So actually, this is a surprise on the downside because Metro Retail Stores is in fact in the grocery supermarket sector, which is supposed to be resilient. Now, how bad is bad? Well, so far from a price action perspective, the market has sold down about 10% since the news broke, actually 12%. So for now, we know that a lot of sellers will continue to be there. Any rallies would be hit, but about 175 to be sold, and that this is your short-term peak. Given that your index is weakening, you have a negative news, other than the 6 cents positive cash dividends, Metro Retail Stores would have to prove to the market that that quarter was a fluke or that they could improve in the next 3 quarters, because an 8 million pesos quarterly income is definitely bad for the market's expectations. The market has been expecting at least about 100 plus million for Metro Retail Stores Gaisano. That is really 90 plus percent lower than what people are expecting for Gaisano to report on its earnings. So definitely, I think the market wasn't happy with that earnings report. And that shows you this very high volume on the downside. So this drop with volume are people who got mad on the numbers and they sold it down. Whether it will fall back to 130 or 120, we have to assume that the market will continue to have sellers, and so your retracement now could lead to as much as a drop to 148 or 134. Now, we're not saying that it will definitely fall because it does have that 6 cents cash dividends. It does have those resilient factors in a sector that is supposed to be strong. But they have to work on their margins, because if they're not going to perform on an earnings standpoint, the market's disappointment could lead to disappointment in share prices as well. Now, for people who are asking, am I evaluating Metro Retail Stores? What would it be? Would I delete it from our picks? I'd say that I'd need more time to evaluate, because at the end of the day, it is still in the supermarket sector. However, I would never, we cannot change the math. The math is bad. The numbers are bad. The gross margin, the operating expenses. Until the company fixes those things, then we could change the view. But for now, we'd say that any rallies, even 167 or 175, would have sellers along the way because the numbers were not up to par. Now, for the earnings standpoint, let's discuss a few companies that had reported earnings this week. Now, actually, DMW had reported that earnings was just about dropping 12% because of last year's one-time gain. Now, the company has their net income standing at 440 million, lower than the 500 million it recorded the same period last year. Excluding that 300 million other income, its net income would have grown 71%. Why? Because the revenues have surged 72% to 1 billion pesos. Why did it grow 72%? Because of its leasing and residential segments. BMW's revenues from the leasing segment climbed to 500 million, while its residential segment soared 398% to 498 million pesos. This was triggered by sustained occupancy and higher rates in their new leases, and supported by higher project completions. We continue to show good progress against our strategic priorities, enhancing our earnings base profitability by having a portfolio of high-quality real estate projects, said DMW CEO Delfin Angelo Wenceslao. While we expect the risk of delays to our project construction schedule, and potentially weaker demand due to the COVID-19, we believe that the overriding strategy we laid out at the time of our IPO remains relevant. The company has now approved undertaking a 1 billion peso share buyback program within the next 12 months. This is to facilitate through the open market, through trading facilities. So I think even when you look at BMW, I think they also reported a 6 billion peso cash, not they reported 6 billion pesos in their cash chest. So this tells you that even with a negative share price performance, the fundamentals of BMW are definitely one of the strongest in terms of your real estate property segments. Whether it drops to 6 or 5, I mean, you have to take a look that these 52-week new lows could potentially be broken as the market is weakening. But as you could see, while other companies that are definitely weak are going 52-week new lows, there are companies such as our Globe, Telephone, Pix that are actually not going down to new lows. So we expect good companies to be able to defend themselves. That rise, that sustainable rise, this is just profit taking and no change in view that our picks are resilient. And maybe, if ever, from a standpoint of replacing Mrs. G, Metro Retail Store Gaisano, you'll notice that the other M that might be more important is either Meralco or Manila Water, as we're seeing that these M's are doing very, very well, very resilient. The earnings did well. That could be a potential replacement given that Mrs. G definitely disappointed on the earnings front. Now, another earnings that you might need to be aware of is that Lucio Tan's lead conglomerate, which is LTG, has actually surged in the first quarter. Now, this is something that many people might have been surprised with. Lucio Tan Group reported a 41% surge in profits lifted by growth in its tobacco and property segments. Lucio Tan attributed net income is 6 billion pesos, up from 4 billion last year. Revenues climbed to 15%, 25 billion. By business segment, the tobacco arm accounted for 80% of LTG's earnings at 4.99 billion. The banking unit TNB contributed 761 million pesos or 12%, while Tanduay accounted for 199 million pesos or 3%. Property segment Eton Properties Philippines has added 168 million pesos or 3%, while the beverage arm Asia Brewery pitched in a 74 million pesos return. Now, as you could see, LTG's earnings were like this. LTG is not against tax increases, but believes that the hikes should be moderate. Continual price increases to pass on higher excise taxes may result in further volume drop. Now, PNB generated a net income of 1.37 billion pesos during the period, 30% lower from 2019, while provisions for credit losses expanded to 3.36 billion from 3.346 million last year, as it anticipates an economic decline due to the ongoing COVID pandemic. As you could see, shares of LTG definitely had a better than expected earnings, but with the current market onslaught, everything, whether you have a good news or a bad news, is being sold down. So you see that LTG from 8 is down to 734. Whether it drops to 7 or 6, I think you could clearly see from the statistics of the market that the decliners are higher and you have 52-week new lows, which suggests that liquidity is leaving the Philippine market. Even with a market value of 3.5 billion pesos, this drop of the market, PSEI, all stocks, financials, industrials, holdings, properties, you're seeing all the way red for everything, which actually tells you that the market just wants to have liquidity. There's no buying pressure at the moment in the market. There's more sellers, and if you're a trader, you have to say that if you have cash, you're gonna preserve your cash until you see a buying signal. At the moment, the market doesn't have a lot of buy signals, and so you might need to keep on preserving your cash. That's like our news for the day. You have BMW, LTG. Another news would be, of course, tonight is Netflix's Last Dance, episode 9 and 10. And I guess you want to watch those things. Oh, I forgot. Lastly, this is a good report as well. I'm sorry if I forgot. Philinvest Land reported revenues rising 16% to 25.7 billion. Philinvest already had a registered growth of 16%, driven by 25% increase in rental revenues, 18% rise in residential revenues, amounting to 17 billion pesos. Now, the company reported a 7% increase in net income to shareholders from the parent firm's 589 billion pesos last 2018 to 6.28 billion pesos in 2019. Why did the revenues of residential grow 18%? This is because higher sales take-up levels, as well as the completion of mid-rise and high-rise residential buildings. Philinvest's range of residential product offerings were focused on affordable housing, mid-rise building communities, a section of themed horizontal resort-inspired mid-rise and highly accessible high-rise communities developed under the dynamic lifestyle Aspire brand. The residential projects continue to address the needs of the end user for the affordable and middle-income markets, which remain to be stable and underserved. These projects were in Valenzuela, Taguig, Manila, Cainta, and Muntinlupa, as well as in the provinces of Cavite, Rizal, Laguna, Pampanga, Cebu, and Davao. Philinvest said that we are satisfied with our 2019 performance, and we have revised our project lineup and moved some launches originally scheduled for the second half 2020 to be 2021. As a result, our capex is expected to reach 16 billion pesos. We will still go ahead with residential projects in new geographies within the country. We've allocated a significant amount of this year's resources for the completion of additional office buildings, innovation parks, development of our townships, to signify confidence that our company will be able to hurdle the challenges ahead of us. Rental revenue growth of 25% was brought about due to the completion of two new office buildings. Fly today has 30 office buildings, which is equivalent to 524,000 square meters of gross leasable area. Fly's target remains to be 2.1 million square meters GLA by 2024 for its recurring income business, including office, retail, logistics, and dormitory investment properties. The office buildings are located in major PEZA hubs such as Alabang, Mimosa Plus in Clark Special Economic Zone, and Cebu. Now, their other developments in Metro Manila are along the Metro Retail Line MRT from Quezon City to Bay City in Manila to address the demand from traditional offices, BPOs, co-working spaces, even emerging technology and e-commerce companies. Philinvest has also ventured into the logistics space through their Philinvest Innovation Park at New Clark City in mid-2019. This is seeing a big demand for big land parcels, ready-built factories to address the needs of the growing logistics and e-commerce industry. Fly is looking at constructing high-specification structures for lease to these customers. By second half of 2020, Philinvest is now going to receive locators who would start their building and warehouse construction, and this is expected by fourth quarter of 2020. Also, the Subic Clark Tarlac Expressway to New Clark City has substantially improved the travel and transportation to and from Philinvest Innovation Park. So as you could see, everyone is very negative on properties, but BMW and Fly have really got with their earnings with flying colors versus expectations. So even if the market is definitely down, you might assume that these 4,000 PSEI lows, where index dropped PSEI 4,000, if Philinvest will make a retest, it could be bought because there's earnings that is really better than expected. So flying BMW is pasado. Mrs. G failed on the earnings front. LTG actually also passed your earnings front. So take a look at the earnings season, as the Philippine market will definitely have more earnings coming out this week, next week. And that would also help you generate your alpha when the market is declining and is weakening. That's all. Thank you very much.
Nikki,
Goodbye.
Nikki, may questions lang. Can you
Okay, let me see.
comment?
Live comments. Ma'am,
Yeah.
any input on Metro Bank's downtrend? Mrs. G has insurance claims issues. Yeah, actually for Metro Bank, we're seeing that the negativity of the banks in general is really, really bad. So we actually saw. I looked at statistics actually. Metro Bank is the weakest in your index, aside from Security Bank. So I don't think that there's enough volume that will support your Metro Bank from a technical perspective. We might see a new low given that the market is very weak, the selling pressure is there. However, we don't know yet the fundamentals, how bad is bad because Metro Bank hasn't reported earnings yet. But we're seeing that the market is selling ahead. They're selling Metro Bank, people are selling financials at once because they're probably scared of what the provision for the COVID losses would be, how much the impact will be. But we don't have like actual numbers. As you could see, Philinvest, BMW, they have been reporting better than expected numbers. What Metro Bank would report, I would know. I mean, I wouldn't know, but technicals are telling you that it's probably not as good. So the banks in general would be selling on rallies. You'd see that this high of 42 and this high of about 38 or 40 is likely gonna be a resistance that a lot of sellers would be there. Maybe they won't sell at once at 34, but any rallies would still be considered a downtrend to be sold into. So new cash wouldn't be buying yet on these companies. As for Mrs. G, yes, there was that they were saying that there was that 190 million pesos insurance claim on the Ayala fire in Cebu. I tried to look at Metro retail stores disclosures whether they have any under whether they could explain the gross margin why it fell this month, this quarter. But definitely one of the reasons why I like Mrs. G is because this company has habitually been giving earnings, and this year was no different. They have reported a cash dividend of 6 centavos, and this company is still in your it's still in the grocery space. Whether they had a problem in their gross margins this month or this quarter could be related on their shipping or importing. The problem is they haven't shown a lot in their press releases. I mean, I kept on checking in your stock edge disclosure whether they have been sending press releases, but I can't see anything except the quarterly report, which is not enough information to give a really good understanding why their gross margin expenses went up, other than, of course, those one-time liability claims. So yon. I can only say that for now, in the short term, Mrs. G will have some sellers here at 167 to 179. But I could say that we have to wait for your next 3 months. Whether is this a trend that gross margin of Mrs. G is really having a problem? Because as we can see, Robinson's Retail had been passing with flying numbers on their earnings reports. We haven't seen the Pure Gold report, but there are three. SM doesn't have a supermarket report yet, but we have to see whether the supermarkets as a whole are having gross margin difficulties, or is it just Mrs. G alone? Because so far, Mrs. G is the only one that really disappointed on an earnings standpoint, even when the sector worldwide. Because I'm also checking Walmart, Target, Costco worldwide. The supermarket in general is a very resilient sector. Yon. So yeah, I think thank you for listening to our live updates, and we'll continue to to give you updates tomorrow on what the everyday happenings in the Philippine markets are. Thank you very much, and hope to see you tomorrow. Bye bye.